Good morning or good night or whenever you're watching this video. My name is Orlando Cog and alongside my group members, I will be explaining Accounting 101, the 10-column worksheet. The prompt given was the following unadjusted trial balance is for Power Demolition Company as of the end of April 30th, 2019 fiscal year. The April 30th, 2018 credit balance of the owner's capital account was 6,900 and the owner invested 40,000 in cash in the company during the 2019 fiscal year. As follows are the adjustments made in the 2019 fiscal year of this company. It goes as follows. The supplies available at the end of the fiscal year 2019 had cost of 7,900. The cost of expired insurance of the fiscal year is 10,600. The annual depreciation on equipment is 7,000. The April utilities expense of 800 is not included in the unadjusted trial balance because the bill has arrived after the trial balance was prepared. The 800 amount owed needs to be recorded. The company's employees have earned 2,000 of accrued and unpaid wages at fiscal year end. The rent expense incurred and not yet paid or recorded at fiscal year end is 3,000. Additional property taxes of 550 have been assessed for this fiscal year but has not been paid or recorded in the accounts. The 300 accrued interest for April on the long-term notes payable has not been yet paid or recorded.
Hi, my name is Sheldon Smith. I'll be presenting on A and B. We found the supplies adjustment by subtracting the year-end supplies on hand from the unadjustment balance, which showed that 8,100 was used. This amount is recorded as supplies expense and deducted from the supplies account. For insurance, the 10,600 that expired becomes an expense. So we debit insurance expense and reduce prepaid insurance by the same amount. Thank you.
The fiscal year, accrued expenses occurred, but yet they were not recorded in the unadjusted trial balance. The accrued expenses were rent payable and wages payable, alongside with property taxes payable. My group member will explain what is happening in the following clip.
Hello, my name is Javon Rocket, and today I will be explaining rent expense adjustment and property tax adjustment. The company has $3,000 of rent expense that was incurred during the year but was not yet paid or recorded. To properly match expenses with the period, this amount must be added to the records. Adjustment made. Increase rent expense by $3,000. Increase rent payable by $3,000. This shows that the rent cost that belongs to the fiscal year and the liability still owned. Property tax adjustment. The company was assessed $550 in property tax for the year, but the amount has not been paid or entered into the accounts. This needs to be recorded so that the financial statement reflects the full tax cost of the year. Adjustments mean increase property tax expense by $550, increase property tax payable by $550. This records the outstanding tax obligation and ensures expenses are reported accurately.
For that explanation. As we all know, when crediting account, another account must also be debited to create for any imbalances so that we have a total amount. So when I'm making adjustments, the crediting side will also have a debited side. Demolition depreciation expenses equipment will be debited. Wages expenses will be debited. Interest expense will be debited. Insurance expense will be debited. Rent expense will be debited. Supplies expense will be debited. Property taxes will be debited. And utilities expenses will be debited. When you add up all the credits and all the debits in the adjustments column, they will add to the same, showing that both columns are balanced. We move on to the adjusted trial balance, which is much like the unadjusted trial balance but with the adjustments integrated. With these new properties, you will be able to fulfill the income statement and the balance sheet. You can check if you have the adjustments correct by if all the debits in the adjusted trial balance and all the credits in the adjusted trial balance add up to be the same. In the income statement, you will calculate your net income by taking the demolition fees earned or your revenue accounts and subtracting them from your expenses accounts. You should have a positive net in your credits. If the company has more in the debits, then they have experienced a net loss. In this scenario, the net income, the company has created a net income. By subtracting the total, the difference between the debits and the credits will be your net income. And by adding a total, you will get a total equal to the debit and credit, which is 100,000, 80,700. The column sheet is the balance sheet. The balance sheet lists out all assets and liabilities of the company. In this scenario, you will add up all the balances and all the credits alongside the withdrawals of the company to make up a final total. In this scenario, you can add up the net income, which plays a role again to make up the final total, which should add up. Next is the adjustments journalized. Adjusting entries journalized. As you can see, these are the adjustments in a more simpler form. This is supplies expense and supplies debited and credited. Insurance expense, prepaid insurance debited and credited. These are already journalized in the 10-column worksheet. However, in this format, it will be more clearly and more easy to understand each and every adjustment. Finally, it's the closing entries. Closing entries are made to reset a company's progress so that they can track from a time period or the end of the year to know how a company is doing yearly. By resetting the process, you are resetting the revenue account, the expenses account, the capital and withdrawals accounts. You do this by crediting the revenue account to income summary to close the revenue accounts. To close the expense accounts, you debit income summary and credit all expense accounts. To close the income summary accounts, you debit income summary and credit capital. To close withdrawal accounts, you debit capital and credit withdrawals. Member will further explain on the topic.
Hello everyone, my name is Kinston. Today I am going to explain the adjusting and closing entries for Power Demolition Company for the fiscal year ending April 30th, 2019. Adjusting entries make sure our financial statements reflect the actual expenses and revenues for the year. Let's go through them. Adjusting entries. First, supplies used. We started with 16,000 in supplies and had 7,900 left. This means we used 8,100. So we debit supplies expense 8,100 and we credit supplies 8,100. Number 2, expired insurance. 10,600 of prepaid insurance expired during the year. So we debit insurance expense, which is 10,600, and we credit prepaid insurance, which is 10,600 also. Depreciation. Equipment depreciated by 7,000 this year. What we enter is we debit depreciation expense, which is 7,000, and credit accumulated depreciation, $7,000. Accrued expenses. We have $800 in utilities, $2,000 in wages, $3,000 in rent, $550 in property taxes, and $300 in interest that haven't been paid yet. So what we do is debit the corresponding expense accounts and credit the payables accounts. These adjustments make sure all expenses are recorded in the correct period. Closing entries. Closing entries reset temporary accounts so we start the next year fresh. The first closing entry is we have to close revenues accounts. The revenue for the year was $187,000. So what we do is we debit fees earned, which is 187,000, and we credit income summary, the same amount. Then we close expenses accounts. The total expenses were $109,450. What we do is debit income summary and close all expense accounts. The list of expense accounts. The next is close net income to capital. The net income was $77,550. We debit income summary $77,550 and credit GA bond capital. The fourth one is close withdrawals accounts. The owner withdrew $12,000 during the year. We debit capital $12,000 and we credit withdrawals $12,000. In summary, adjusting entries make sure all revenues and expenses are accurate, and closing entries reset the temporary accounts and update the owner's capital. This process keeps the books ready for the next fiscal year. Thank you for watching.
On our explanation of the 10 column worksheet. We hope that you learned something new or have a deeper understanding of the 10 column worksheet. Thank you for spending time with us and watching us fully through. We hope you have a good night or morning or evening. Thank you for watching.